Good afternoon, traders. Today's Wednesday, December 5th. Coming to you here from RJO Futures. My name is Bob Haberkorn, Kevin Craney, and Jeff Friedman. We're here to talk about Friday morning's jobs report that comes out at 7:30 a.m. Central Time. The expected kind of the consensus is what we're hearing right now is around 95 to 90,000 is the expected. Also looking at the rate possibly to jump to about 8% is kind of what people are throwing around right now. Last month the number was at 171,000. So it would be a decrease back down to 95 if we see that. It's a first job number after the election, so you kind of take the politicized factor out of the job number here. It'll be interesting to see how it plays out. But from what we're looking at, I mean, you got a lot of things coming up on the horizon. You have the debt ceiling coming up here at the end of the year. That seems where all eyes are focused. What are you looking at for the jobs number here, Kevin?
Yeah, I think probably right along consensus anywhere from 90 to 100,000. While that's a big number, I think one thing we have to take into consideration for this number is we're going to get some Hurricane Sandy skewness in this number, so it may be kind of a messy number to deal with. We're going to have to back a few things out. All things being said, though, how is this going to affect interest rates in the markets? I really don't think it's going to have that big of an impact right now, only because the focus right now is on the fiscal cliff. How are we going to negotiate that? What's the final outcome going to be? Is it going to be higher tax rates? I think we all know it is going to be.
Sure.
But in what way is that going to be negotiated? So for this number to really have a meaningful impact on the interest rate market and send prices lower, I think you're going to have to see that number come in well above where consensus is, and I just don't see that happening given everything that's going on in the economy.
You know what's going to be interesting to see is the revisions from last month. Being that they're at 171, now they're expecting 95. That's going to be interesting. I'm looking forward, traders. I think that's a good thing to watch tomorrow. Is watch after the number comes out, a few minutes after. It varies, but you'll to see what last month's number gets revised to. Chances are, I would think you probably see a revision down. That expectations are this low after we just had a 171 print, which is not good. 171 print. What are you looking at, Jeff?
I'm kind of looking at the same thing. You got to remember that if you know. 90 and 90, we're kind of cutting it right in half from, right before the election. We had, it looked like we were increasing our job growth. We had a downtick in the unemployment rate under 8% for 2 months in a row. Basically, now we're going to uptick to 8.0. Obviously, the storm of Sandy is going to make the numbers very sloppy. It's gonna be a very hard way to get a handle on it. But have said all that, really the debate in Washington is probably gonna overshadow everything. Give you an example, looking at the stock index futures real quick. We were down 7-8 points today. It would have been the third day in a row being down. And then all of a sudden, for whatever reason, there's talk that they're getting closer in their negotiation, and we have a 14-point rally in the S&P futures to put us up around 1411. It's been a choppy trade. Every time we hear that they're far apart, we seem to break down a little bit, and every time they're, seem like they're going to get a deal together. And the real question that you have to ask yourself, should you use the non-farm payroll report to posture yourself for the bigger report of Washington, D.C. and the real question that I'm thinking about for my clients is, in the end, is it a lot of posturing, and in the end, though, at the last minute, in the 11th hour, get a deal of some kind that both can say we won, and then the market rallies on that, or are they going to fall off the cliff, and if you really believe that, then you should be posturing yourself, looking for resistance level in the stock index futures or whatever market you trade, and use this report to get into a swing trade or position trade. And that's kind of how I see it.
You touched on something, and so did you, Kevin, about Sandy. And Sandy's going to come up if the number's bad. You're going to hear there's a hurricane, and that's going to be brought up, which, to some degree it is, but seems to be a big thing that comes up. I think the big thing is what's going on in Washington, and over the next couple months, as traders watching this, you got to be prepared and watch for the roller coasters, the ups and downs, because Jeff touched on there's a lot of positioning going on, jockeying for position on who's got the upper hand right now from the Republican and the Democrat side. And I think what you're going to see is, it's the continuing roller coaster ride you're going to see. I mean, you're going to have one side will come out in the morning and say something, another person will come out in the afternoon and say something. So there's great ranges to play. Job number aside that comes out on Friday, that's a good thing, I think, for right now, the political environment we're in, is to play the ups and downs. Watch the way both sides have come out and are jockeying. For a decision, for a final, what's going to happen with the debt ceiling? I don't know. I mean, I think no matter what happens, both parties will end up kicking the can down the road. 4 years from now, we'll probably be talking that we're at 20 trillion, and see how it plays out. I mean, we're at 16 trillion right now. If past budgets or past or any inclination of where we're going to be in the future, we've been running $1 trillion deficits for the last 4 years. We'll probably be at 20 trillion in another 4 years. So keep an eye on it. So budget talks aside, job number on Friday morning, expected 95,000. Possibly the rate to go up to 8%. It'll be interesting to see, but I think we're all consensus that probably will be mute on the factor unless it comes in, extremely high on the expectations or a very low print. Probably won't move the market too much considering what's going on in DC. Remember, traders, trading does pose a significant risk. It's not suitable for all investors. Remember to follow us on Facebook and Twitter as well. And if you have any questions, please feel free to contact us. Good luck trading this week, and look forward to speaking with any of you if you have questions.